a little more hawkish or sounding as though they are going to be ready to tighten a little bit sooner than maybe later. How do you react to that? And are you feeling or hearing the same things?
Sure. So certainly we are seeing strong GDP growth as well as strong earnings from corporates. However, our view is not to see the central banks hike rates in the cyclical period. However, we may see the Fed signal in their next meeting that they may begin tapering asset purchases, and which may begin in 2022. However, again, still not expecting a hike in rates at this point.
So potentially a signaling that they will let up a little bit on the asset purchases, but no increase in interest rates. Did I characterize your thoughts correctly?
That's right. That's right.
Okay, great.
And globally, we're seeing a similar, in terms of the Bank of Canada, the Bank of England, starting to taper. But again, looking across developed markets, we don't expect rate hikes in any sort of near term.
You've been named by Morningstar a rising talent in a bond shop, and that's what you do, and that's one of the best bond shops there is. I was looking at your diversified income fund portfolio, and it really is diversified. You've got governments, securitized loans, investment grade, high yield, non-U.S., emerging markets, and emerging markets is your largest position. Why?
Sure. So, looking at today's starting valuations, developed markets have outperformed emerging markets, as is to be expected given the firepower of the central banks, as well as the vaccine rate here in developed markets is clearly higher than in emerging markets. However, again, looking at starting valuations, that leaves us with, emerging markets as a potential opportunity down the road for additional spread tightening. That said, we're being very selective in where we're taking exposure within emerging markets because, as you can tell from COVID, from tourism and the like, that it's not going to, we're looking at this year, 2021, being one where different countries and regions and sectors will perform very differently, where, hopefully in 2022, we see a little bit more of a moderated global synchronization towards growth.
Sonali, it's Kelly, and this description really caught my eye, where you were they said your cautious contrarianism is what really stands out. At PIMCO, they say you're distinguished by your willingness to take less risk, even if that positioning goes against conventional wisdom. Now, we usually see people applauded for taking more risk and really, having the guts to lay these big bets and how that pays off. Tell me why you think your strategy is described as being brave enough to take less risk. What does that mean on a day-to-day basis?
Sure. So, we want to make sure our portfolios perform even in the downside. So, for example, within diversified income multi-sector credit, we want our portfolios to perform on the upside like high-yield credit, but with more downside protection. So building that resilience into the portfolio construction. And, that's something that we hear from the top down at PIMCO, all the way from Diane Ivison down in terms of how we want to perform. And, and as a result, we want to keep up certainly with the betas, but produce more resilience in the downturn.
Shepard Smith here. Thanks for watching CNBC on YouTube.